Russia versus Ukraine is all over the news. And no matter how far away we are from the whole situation, the war is going to impact us. But how? Welcome back to Revolution Read On, a daily podcast where we break down one story from the world of business and finance. Here's your story for today. Every newspaper in the world has just been reporting stock market crashes since Russia invaded Ukraine a few days back. Even the Indian stock market plunged by around 5%, with investors losing around a whopping 13.75 lakh crore rupees. But why does a war in some other part of the world impact all the stock indices? A major reason for this is the human psyche. The stock market has always been an investment instrument that people consider high risk, and rightly so. They don't want to trust it blindly in times of uncertainty. So, a situation like a war causes a panic leading to massive sell offs. However, this panic is usually short lived. Smart investors begin to buy the dip, that's pick up stocks at low prices thanks to the sell off, and the market mostly goes up again in a few weeks. According to a research by CFRA, the average time taken for markets to recoup losses is 28 days. This is exactly what happened during the last World War III scare in 2020 when the US conducted a drone strike on an Iranian general. The markets went into a panic but were soon back to normal. However, these fears can be well founded if a war does happen. Supply chain crisis, rising inflation due to shortages of goods, and other such factors can eventually eat away at companies' profits, causing stocks to decline in the future. So it makes sense to sell some iffy stocks and invest the money in safer investments or keep it in hand as precaution. But analysts predict that the current situation will not have a long lasting impact on the markets. Plus, most investment gurus like Warren Buffett suggest that you should keep your stocks and buy more when there's quote unquote blood on the street. Meanwhile, where the stock market starts tanking even at the talk of war, the prices of commodities start rising. One of the first commodities to rise in the time of war is oil. It literally fuels the war in a big way. Even in general, most countries have to import oil at least in some quantity, and the war makes the supply of this oil uncertain. Hence, the prices go up. Right now, oil prices are at an 8 year high of $104.99 a barrel. And it's not the only commodity touching the skies. Gold is also at an 8 month high right now. Why gold? Because gold is considered a safe haven asset. This is the asset that people buy when they no longer have faith in other investments. Why? Here again, human psyche comes into play. For centuries, humans have believed gold is valuable, probably because it was used as currency. That belief and the fact that gold is a physical asset you can hold and feel often cause investors to buy or invest in gold during times of crisis. And it's not just gold. Silver has also been gaining for the same reason. Prices of other metals like aluminium, copper, nickel, and so on also usually rise during times of crisis or war because of their tangible utility. A lot of countries also import metals like nickel and cobalt, which are now needed in several electronic items. This reliance on imports makes their supply unreliable, which also plays a role in increasing prices. Right now, aluminium prices are up 3% to about 3,380 US dollars per ton, nearly touching an all-time high set in 2008, while nickel prices have hit a nearly 11-year high of 24,870 US dollars. Several other commodities are also impacted depending on their supply and demand and the regions involved in the war. For instance, the current war is expected to raise the prices of grains as Russia and Ukraine are both major suppliers of grains. Same goes for natural gas, of which Russia is the largest exporter. So, what should an investor do in such times of uncertainty? Number one, invest in some safe haven assets like gold, silver, and government bonds. Number two, go for SIPs instead of lump sum investments, as it will ensure you have some cash in hand during times of crisis. If you also have some tricks and tips on wartime investing, do let us know. Spread the word, the revolution is on. Thanks for listening in. Make sure to follow this podcast if you aren't already. We'll be back tomorrow.